So let's start off in true Economist style by looking, the subject is to privatise or not to privatise, but Doug, you want to subvert the whole idea, and I think it's a very fascinating, you had an article in Foreign Policy, I think, about this, that the issue is not so much whether an asset should be run by the private sector or the public sector, but what is the best way of managing the asset to deliver the biggest yield for the country as a whole. Maybe you'd like to talk about that.
Thank you. Yes, the issue of privatizing or nationalizing, whether the state should be owning this or the private sector, could be characterized as a phony war that has been waging for the last quarter century or longer. What is quite surprising to many people is that we own a lot more public commercial assets than we normally think of. Worldwide, we have come up with a figure in a book that is going to come out this spring. It's called The Public Wealth of Nations. And the number is, as we learned from McKinsey, one number, $75 trillion US, which is almost equivalent to, or roughly equivalent to, global GDP. And this is the number for central government and the book value that my colleague has been doing some research on and coming up. And it's obviously partly come up with to provoke the idea that this is so much more extensive than most of us could imagine. And to illustrate that, if we could be able to improve the yield of this wealth, it would be the equivalent of the GDP of Saudi Arabia. So it's that's 1% improvement. And the reaction to this among many people is that, well, in the developed world, we don't have a lot of this. But it actually goes for emerging market, developing economies, or the developed economies alike. There is a lot of these public commercial assets, and we're not talking about the White House or Buckingham Palace or the Yellowstone. We're talking about commercial corporate companies, electricity, trains, postal offices, and we're talking about predominantly real estate that is often has a negative yield. In many countries, it's actually costing the government a lot. And it's also losing in alternative income, as if you would had invested this this money in government bonds or with a proper asset manager. So it is instead of first of all realizing that we do have a huge amount of public commercial assets, and we're not even talking about where the bulk of these assets are, which is in local governments and regionals, or in a federal economy like the US. The states and the municipalities have even more wealth. So this is a very conservative number. 75 trillion is a very conservative because it's only central government, federal in the US or Germany, and it's book value. So the rule of thumb is most of the time that, first of all, central government local and regional is a multiple of what the central government has. So you can, your imagination is the limit for that.
You were mentioning to me before there was an interesting figures on the yield that private sector gets on land within the states and the yield that the public sector gets.
Yes, there are some research in the US that has shown that the private sector get twice the yield than the public sector. And so the background for this, we can only speculate. There is not enough research. There's enough research to say that the public sector is not getting the yield that it should get. I think that's quite clear. And we also know quite well what to do in order to get a yield that is more in the private sector, more similar to that of the private, and that is basically to take out all these assets and put them into a ring-fenced vehicle at arm's length distance from the government. We have chosen to call this a national wealth fund as opposed to a sovereign wealth fund. Sovereign wealth fund is more like a money manager, like a hedge fund, and while a national wealth fund is more like a private equity company, which is actively managing operational assets. Yes.
When you talk to politicians about this, do their eyes light up and think, God, there's this pot of money that I can exploit and reduce the budget deficit? Or do they think, hang on a second, if I say, like Britain tried to, let's privatise the forest, people go, you're going to chop down trees, you're going to blight the landscape. What's their reaction?
As we have, with the lack of awareness about these assets we have today, the reaction is different from a country where there is a financial crisis, because it does depend on transparency. Since we don't have the transparency on these assets, it's not really up in the debate as an alternative. But once you get it up into the debate, and in one country the Prime Minister was actually very clever in saying, we are in a financial crisis, so our option, the option to raise more debt is closed. That's gone. So it's either more austerity or raising taxes. The third alternative would be that we try to squeeze out more yield out of these assets, which we now have, showed you how much it is. And technically that's not very difficult, but it will take a very brave government, a very brave Prime Minister, because what you actually are doing is that these assets, which most of the time is equivalent to 100% of GDP, is somebody is getting the yield out of those assets today. Somebody is benefiting from that. And you can call them the brave 300. If you are going to take away the yield from the brave 300, or the lucky 300, into the, let's say in the case of Greece, it's a 10 million, or Ukraine 40 million, or the US 300 million, that's going to take one brave government to do that. Because you're taking away benefits from vested interest that is using these assets today into the general population.
Well, that brings us neatly onto Greece. And Yanis, I apologize, as a Greek, you're going to be asked a lot about this. So you were involved in the early discussions about privatising Greek assets. The headlines all suggest that Syriza doesn't want any of that. But what's your understanding of where we are in the privatisation programme?
Well, thank you, Philip. Indeed, I was involved. And it's actually very interesting to recall exactly what the debate back then was. Because there were several alternatives, and it's interesting to see why we ended up with what we ended up and see the reaction of the new government today. First of all, the Prime Minister at the time came out and said, you keep on saying we're a bankrupt nation and we have nothing. Actually, we have lots of assets. Very much what Dag was saying. We have lots of things. And he sort of put a number. Very interestingly, immediately, the Eurozone said, well, hang on, if you have all these assets, and then you can contribute to your rescue plan. So we'll put them as part of the rescue plan. The suggestion from some of them at the time, which was, I think, a suggestion Greece could have pursued further, in particular from Finland, was why don't you use some of these assets as long-term collateral for some of our loans, which, interestingly, if pursued, and if discussed, I think, seriously along the lines of the proposal of the National Wealth Fund, would have allowed Greece to have long-term financing for development of these assets, and might have helped both with the development and also provide the collateral that countries like Finland wanted. That, unfortunately, was not pursued. And partly it was not pursued because I think the IMF also saw any sort of further debt backing the development of these assets as not quite the target towards which it was moving, namely debt reduction. And therefore, Greece ended up with a privatization fund whose sole aim in the law actually was that as soon as you take it, you've got to dispose it. So it was the exact opposite of what Dag was describing. It was basically a bailiff. Selling the assets at knockdown prices. And in fact, there were some people in the Troika who were saying, I don't care if you sell it for €1. Now, the Greek side did say at the time, well, hang on, if we are basically don't have access to the markets, who do you think is going to come and buy these? And what are they going to pay? And why do you think these things that might, in a well-functioning market or sort of functioning market, be worth actually this number or maybe more? Why do you think anybody will come and pay anything serious when the benchmark effectively is our bonds, and they have this yield which is stratospheric. In any event, we do not know when to return to markets. And again, the response was, that was, I think, the Troika showed a distinct lack of understanding of how actually the markets work there, because they should have realized that, with some patience and long-term perspective, both development in Greece could have come back faster, and in fact, long-term, the debt that others would have to provide would be less. That didn't happen. So we ended up with this privatization fund that then got a number of projects in. Some were projects already in development, so project finance type things like the regional airports that were going to be given in a concession, the existing airport whose concession was going to be extended, projects that were mature and well developed from a market perspective. And it also got all sorts of other things that were not at all mature, needed a lot of work, like the bulk of the real estate. The result, therefore, has been very uneven. And because there has been no real debate about how you treat these assets, and exactly the sort of debate that Doug's challenge brings to the fore, there was a lot of confusion and a lot of opposition even in the public. They thought that Greece was selling the family jewels for nothing. Interestingly, the reaction of the new government has been to say something much closer to what Doug is saying, and which I think is very good. Now, it will raise inevitably all the same questions, namely, who's going to finance that? What exactly are they going to demand? If they're for the private sector, the benchmark will be the Greek government bond yield. Will they, and therefore, what, again, they will go, if you want, on the cheap, even if it's long term. What are the policy aims? Who is going to bear the cost of the rents, effectively, that the development of these assets will require, and so on and so forth. But it's interesting that they have actually put it, they said they're going to abolish this, if you want, bailiff structure in terms of a more long-term development structure.
I think it's very interesting. I mean, I think the impression of a lot of people from outside is that Greece, which was being sort of shoved into the free market camp after long years of clientelism under both New Democracy and PASOK, and that this government is more Venezuelan in its philosophy than that. But you're saying it's a rather more subtle approach. That we know that they want to reform the tax system and generate tax revenues, but they're not blanket opposed to all private sector involvement.
Yes. It's a difficult question to answer. You have to remember Greece really went through absolutely catastrophic period. It saw its GDP decline by more than 25%, and has 27% unemployment. More than half the young people are unemployed. There's most of the talented young people emigrate, and Syriza grew up as a party, partly of protest and partly of despair. And Syriza was successful in capitalizing and the sort of giving them back the dignity and hope, and that was really the big thing. Within Syriza, there are many voices. We heard actually just this morning, as I was leaving to come here, I was following on Twitter the development minister's statements on privatization of various assets, and I think they were far more extreme and I wouldn't call them Venezuelan, but sort of towards nationalization than what Mr. Varoufakis said in London last week, where he said he was not dogmatic. He thought that certain assets should not be available for privatization. He mentioned energy. I think there were maybe some issues there with EU policy, but he mentioned energy security and affordability, and that I think is a very important thing and a very important matter to be discussed. But he said that insofar as ports are concerned, for instance, or trains, he was not opposed. So it's a more nuanced approach. I think within the government themselves, they need to have this debate.
Well, we heard from the previous panel that people were worried about emerging market growth, and 1982, Mexico had a problem. 1994, Mexico had a problem. Nobody's talking about Mexico as a problem these days, and you have a reforming government in place. And I just, very interested from your perspective, looking at, Europeans battling about our, inefficient, perhaps overly cosseted governments. How, from the point of view of Mexico, you see the balance between government involvement in the economy and private involvement in the economy, and how it's changing there?
It's not easy for me to speak on behalf of the whole country or the whole government, federal.
But have a go.
Yeah, but yeah. But speaking on behalf of Pemex, what I can tell you is that Pemex was nationalized 76 years ago. It represented up until 4 years ago 70% of government's income. It now has been reduced to something close to 40%. So we need to be very cautious when managing Pemex. We recognize that we're in the need of modernizing and restructuring our company. We need to move forward to more efficient ways of managing energy assets. We need to strengthen our position, because while opening the market to private investment, while opening the market to venturing with private companies, it's not going to be easy to remain in a comfortable position without engaging into these restructuring issues. So Mexico indeed needs a lot of restructuring. Pemex needs a lot of private investment, but we need to strengthen our industry first before being able to open the market and privatizing the market. We have gone through different privatization of several industries. The sugar industry was recently privatized, back nationalized, and now it's going back to being privatized. So we don't have a recipe for all of the industries in Mexico, but we're managing to become a more efficient company.
Is there a thing, I mentioned Venezuela before, is there a recognition that the massive, Venezuela threw away this fantastic asset and is, verging on default, and there's nothing in the supermarkets, that among the public and the political elite, that clearly can't be the way to go, and is there greater acceptance of private investment just by looking at the Venezuelan example, or don't people think that way?
We're taking a lot of examples. Statoil is one of the, probably the model that we're pursuing. They started by doing what we're currently doing. They started by modernizing and restructuring their own company, so that by the time that it was possible to privatize the industry, they were ready for competition. We do recognize that the Venezuelan model seemed to be a very good one, but it ended up being very risky for the whole country. We can talk about the Brazilian model as well. It was a very good approach to privatization, but they ended up having some issues, and I can give you some examples. They decided to invest a lot of money before privatizing in developing some patents and some technology, specific technology for oil and gas. And they ended up having a lot of, they're having a lot of issues today because they developed around 150 patents, and now because of their normativity, they're forced to use those patents that are not the state of the art anymore. So we need to be cautious, and we're trying to find a balance in between what we have seen happening in Statoil, what we see or what we saw happening in Venezuela, what we know is currently happening in Brazil, and we're taking a very close look to what's going on in Latin America. Colombia, for instance, has been able to develop their market quite easily and very fast and very efficiently. We're actually leading an effort for grouping all Latin American countries or Latin American oil companies or national oil companies in something we're calling the GPL-10. And we're sharing practices, which is something that was not common in Latin America. As you know, because of our culture, we're very protective and we don't like sharing experiences. We're switching to doing what Europeans have been doing for a long time.
Yes. Now, that we could broaden it out a bit, because one example of how nationalization becomes privatization that Britain did is to privatize things, then regulate them via different public bodies to try and ensure that they're not exploiting their natural monopoly. Now, you were just telling me that you now have 4 regulators under the new system, right?
Yeah.
So maybe just explain what they're doing there.
I've been trying to get that explanation as well.
Oh, okay.
But, no, we have what we had before, which is the energy ministry, and they're the top regulator within the energy industry. They regulate Pemex and they regulate the Federal Energy Commission, which is the entity responsible for managing energy assets. And then we have the National Hydrocarbons Commission, which is a newly created entity, mostly responsible for upstream. And they're the ones defining the fields to be sent out to the market, and they will continue to review and to monitor that efficiencies and commitments are actually complied. And then we have the Energy Regulatory Commission, which is responsible for mid and downstream. And they've been operating for a very long time because Mexico has been opened for private investment for many, many years in pipelines mostly. And then we have another new entity, which is the Energy Fund, and they're responsible for managing all the money that enters into Mexico as a result of this opening of the market.
Yes. I don't know what the Spanish for dog's breakfast is, but it sounds a bit like that. But Doug, you've obviously looked at the European systems of regulating. How does that sound, and how has Europe done in setting up these off-com, off-gem type things?
I mean, the UK is a very sophisticated and of course both the pilot but also the model for many Western countries. But it is quite complicated, and it's very interesting to hear what Raul is saying about the technology side, because I find this has a huge impact on the whole issue of moving something from the state sector to the private or deregulating it. Technology has a huge, it plays a big role. And if you just look at trains, which is a sad story in most European countries, or anywhere in the world actually, you can only find, there might be others, but I've only found one country where this works splendidly, and that's Japan. And one of the reasons is, or the reason I found quite compelling is because they changed technology from the old railways to a completely new technology. And they privatized, deregulated and everything, and they have regulated managing this, and it works splendidly, as anybody could bear witness to who have ridden the train in Japan. And the same thing goes for post offices, which is also a sad story in most countries in Europe etc. And it's taken 30 years for the UK, despite being the most efficient and most and the thought leaders in this area, because there is a new technology, which is email, and especially the retail side of post office has been a sad story in the UK, while other countries like Sweden and Holland, etc., has just outsourced this to gas stations, grocery stores, etc., and using new technology to disperse pensions, and to deliver packages, etc., which works very efficiently. Once you have, as long as you have the old technology, you open up that Pandora's box. There's been underinvestment for 50 years, and who's going to take the blame of that is often a very, very acrimonious debate in any country.
Yeah. I mean, Yanis, this is the problem, isn't it? We privatise a lot of the competitive industries in the 80s, and so what we've got left are the natural monopolies, which when you privatise them, you can't just let them go. What's your view on how countries have managed this issue?
Well, I don't know that I have a sort of global view on this, but it seems to me that the key challenges are evolving with the technology challenge. You know, a lot of when you have the monopolies of this sort that depend partly for delivering the service or the product on technology, there will be often a reluctance to move ahead because there will be a natural entrenchment and possibly also protection of jobs, because many of these industries will not want necessarily the disruption, and that raises a very interesting question of how you move ahead by not creating sort of massive unemployment in the sectors, but you don't at the same time allow this to be to stop you, to hold you back. Since you asked me earlier about Greece, I think Greece will have to ask these questions very very soon, because it was in the process of changing the energy sector, which was, basically a monopoly that was going to break up the electricity companies. The new government had said no, because again, there was a fear that this was going to lead to further unemployment. But at the same time, there is the challenge of, it's not quite technology, but it's a sort of similar type of challenge, which is decarbonization for a country that depends very heavily on its own resource of lignite, which is one of the dirtiest fuels, and a country that otherwise depends on currently just on Russian gas. And so that will be, we need to see how the new government deals with this challenge. They've already announced that they will go back and they will not proceed with privatization. But at the same time, unless they have a long-term plan dealing with both the energy sort of independence, affordability, and decarbonization, they will not be, they will stumble. Mm.
Doug, we were talking earlier about Manke Olsen, who's, I don't know how many in the audience have read his work, but a fantastic social economist, really, about the role of monopolies and cartels within society. I was thinking, Yanis was talking about Greece. I was being told when I went there about the truckers' licenses and the way it costs more to ship something from within Greece than it did from Italy. We could think of many other areas where there are monopolies, the battles of taxi drivers against Uber, for example, in many big cities. Again, turning the issue that we're discussing here on its head a bit, is the problem not public monopolies always, but sort of private cartels that have interests, which Manke Olsen.
Yeah, no, I think it's very. We're talking about Greece, and we're talking about all these countries. Sitting in a Western capital, it's so nice to be talking about these countries that are in obvious financial difficulties, but we have a lot of problems in our developed countries as well. The US probably has the biggest challenge and the biggest opportunities in this area, with the trains, with the post office, etc. And the idea of whether it should be private or nationalized is irrelevant, because it's being able to manage this professionally and getting a yield out of it as the would be the financial term, is the most important thing, and that to introduce new technology into all these things. And whether you could actually argue that it's probably easier for the private sector to run a monopoly than the public sector, because the problem with public sector assets is the idea of being a regulator and an owner at the same time. So that's being the referee in your own football game or baseball game, etc. Whatever comparison fits with your imagination. But the important thing is to be able to separate regulation from ownership, and that is very difficult as long as the government is an owner. And that's why putting it into a national wealth fund, almost like a central bank, could work as an intermediate step or as an alternative. But the government, would always benefit from having, or a sector, whether it's privately or national, always benefits from having a regulator with more clout than the owner itself.
Well, I want to go to Q&A in a second, but I want to just finish up by asking, let's thinking back over the last 30 years, we had a tide of privatization, and then since 2008, we've had the government getting more involved, particularly in finance, which we could discuss later, but also we've seen the limits in Greece and elsewhere of the political willingness of electorates to put up with privatization. I just wanted to get a sense from you of where you think the balance of the argument is going. Are we going towards more government involvement or more private sector involvement? Raul, from the Mexican point of view, is Mexico on the privatization path broadly?
Probably, but I think it's going to be a matter of how we manage this freedom, because we've been asking for a lot of these things for a very long time. I mean, being part of Pemex, we've been asking to be able to manage our own budget, to be able to manage or to engage into different types of projects, to get larger loans for our operation. We were not allowed to. Now that we're allowed to do that, and now that we're responsible for managing our own budget, we need to prove to not only to the government but also to the markets that we're ready to do so. So if an industry such as the energy industry in a country such as Mexico manages to prove efficiency in managing this freedom, then we will probably be talking about being in the path towards privatization. Otherwise, I think it's going to prove that we're not ready yet. But I mean, we've been moving forward towards that path.
Yanis, you've talked a lot about Greece, but maybe as an international lawyer, from your perspective of globally, where we're going.
Well, I think globally we are moving more towards privatization, but I think we're inching closer to what Doug has been trying to articulate. I actually did want to talk a little bit about Europe, because for countries like Greece, but not just Greece, the fact that you have constraints in your budgets and constraints on your debt means that you have to find alternative sources for funding all your various needs and developing your assets. And indeed, it seems to me that not just for Europe, where this constraint is sort of more evident and entrenched in the treaties, but for anybody else to try to see that what yield you can get out of your assets as a country is effectively a complement to your tax raising ability. And there's an interesting, I think, balance there to see to what extent the rents that you effectively extract from these activities eat into your tax or sort of hidden taxes, and to what extent these are paid by not by your taxpayers, but by people outside the country. But it seems to me that the constraints on debt and deficit, not just in Europe, but particularly in Europe, but elsewhere as well, will mean more privatization. And I think the formula, the way Doug approaches it is actually, probably quite liberating in getting away from this false dichotomy.
Doug,
you've won over Yanis, clearly, but do you think you're winning? No, I think it's a long journey. I think it's a long. The day when the U.S. government publishes an annual report of its public commercial assets, I think then we know we are on the way on a completely different way of
of looking at public sector balance sheets and public debt, etc. And when the debate in the US is about 1% yield of these assets could lower taxes with 4%, or a normal yield from these assets could finance the entire need for infrastructure investments in the US, then I think we're starting on a different path.
Okay. I hope they value their pension sector liabilities correctly as well. Let's throw it open to questions. It's a big field to cover. Please raise your hand and ask. Hopefully somebody will come and find you with a microphone. Anybody with a question? Okay, I'm going to ask another one, which I didn't get to, which is about finance. So the ultimate criticism of the private sector's involvement we've seen in the last 6 years is that the private sector gets all the profits and the public sector gets all the losses. And I suppose a secondary criticism, which the HSBC scandal, now that Stephen King's off stage, I don't have to embarrass him, is that the people in charge of private sector companies claim that they are so brilliant they deserve the bonuses for when things go well, but when things go wrong, they say, well, how can you expect me to know what's going on in a huge organization? I can't be responsible. Do you think that the finance sector is a completely separate issue from all other businesses, and we just have to rescue it because it's so important? But also, do you think it's infected this debate so that it's made the public more cynical about the benefits of the private sector? Maybe we'll start off with you, Yanis.
Yeah, well, I feel like Atlas carrying the world now.
Yes.
With this question. I do think finance is different. It is not a regular industry. It is effectively, it's a regulated confidence trick. It needs to, because that's what credit is. It's ultimately, when it's a confidence, it's a trust trick. That's what the word means. I just wanted to say it in a more provocative way. But and I think in this sense it is quite different from other things. But yes, you're right in this criticism. But the answer is, have we not? My questions back is, have we not learned from this? Are we not doing enough? Or maybe we're not doing enough, but at least the debate is now wide in the open. It's not that anybody can sort of hide. Equally with the remuneration of people who assume all these risks and have the upside and not the downside. Again, we're having this debate, and it is good and proper that we should be having this debate. And in the context of the role of privatization, it is, again, very appropriate that we should be having this debate when we set up these independent entities that will be if you want, the custodians of these assets. It's my response is, of course, mistakes have been done. It's extremely important to own up to them. It's extremely important to acknowledge them. It's extremely important to see how you'll move forward. And I think on that front, we are much better off from where we were.
Doug, what's your view?
No, I completely agree. And if we would manage our other public assets the way we have managed the banks that have been nationalized after a financial crisis, we would have been getting a yield from these assets that are many, many times larger, much sooner. I mean, the Americans has been the pioneers in this from the S&L crisis in the 80s and the 90s, etc., setting up a separate vehicle, which is almost like a national wealth fund, taking over the good part of the banks and separating out the bad, etc., and they're shining the light on transparency, having a clear-cut strategy. We're going to clean this up, but it's going to be privatized. It's going to come back into the private sector because that's where it belongs. We need to, and there's a clear plan. And if we could have the same clear plan for our other assets, which are many times larger, that would be very, very beneficial for all taxpayers, all investors that are investing in sovereign debt, etc.
Raoul, do you want to weigh in on the finance sector?
Yeah, well, because of the energy or because of the reform moment that we're living, Pemex and Mexico are trending topics. And because of that fact, we're being flooded with money offers. But that isn't totally true because we don't have bankable contracts or bankable schemes to engage in partnerships. So we're working on moving towards those bankable schemes and that bankable normativity. And we realize that until we are able to offer to financial markets these bankable type of partnerships, we will not be able to take advantage of these money offers that were being offered.
Oh, so people have, it's like a gold rush town. People are flooding into Mexico to offer to lend you money.
Yeah, a lot.
I'm sure.
And we're just working on managing that.
There's a lady with a question on the right, the front. Thank you.
A question for Raul. Has the meaningful change in commodity prices impacted the timing of the likely privatization and auctions, as well as the likely appetite for the major energy companies to bid?
That's a very good question, and it's a challenge for Pemex because, as you're aware, oil and gas companies or oil and gas operators are used to plan their strategies for longer terms than Pemex. So they plan for 10 to 15-year terms, while we were used to do that for 3 or 5 years. So we're moving towards these 10 to 15 so that we can take advantage of what the market has to offer, and so that we can see this crisis as a very well-contained crisis. So we're learning how to do it. We're working on managing the moment, and we're learning a lot from larger private oil and gas operators.
Another question? Yes, gentleman in the middle here. Thanks.
Hi, a quick question to Doug. So what's your advice to the Ukrainian government? Should they create a national wealth fund or something else?
I think that's a question. I mean, technically, these issues are fairly simple because restructuring commercial assets is what the private sector does every day. So that is not the million-dollar question of this game. It's really a political one. So whether to go for a national wealth fund in Ukraine or other countries in similar troubles, or something more of a unit inside the government, it's really a tactical political issue. And it's something that the people who are going to take the responsibility and be held accountable for this needs to measure, because it's a very, very difficult issue, and especially in a country like Ukraine. The important thing is, I mean, ideally from a technical point of view, it's much easier to do this if you have it ring-fenced clearly from a legal perspective, which Jan is an expert in setting up, and so that it's you can prove to investors that this is really without short-term political influence. But if that's not possible, the important thing is to set up a unit inside the government that at least takes that perspective as if an asset manager and takes control. I mean, you would be surprised, even in the most sophisticated European, Western governments or OECD countries, governments do not have control of their public assets. You don't have to go to these countries that are in financial trouble. And even in the fragmented ownership means that ministers basically keep this information to themselves and do not want to share it because they like to have these assets under their control, etc. So the first thing is for any country is to create a national register, which is what any holding company would have anyway. But if you're not able to do a holding company, at least have a national register so that you can have clean titles and clean information on those assets. And then be able to move into private sector accounting so that you can have a market value of them and you can understand the alternative use of each asset. And this is the important issue. And when a government can have that discussion, then they are truly in control and they are truly able to see what is the best way of getting a yield out of these assets.
And how's the message going down? Are they receptive?
I mean, as an advisor from the outside, I mean, you're not always privy to. I mean, these are things that you can only, explain what are the different alternatives, and then it's up to a government to see, the politicians who are going to take responsibilities, and then you can bounce off various alternatives back and forth. But the final decision is really up to the politicians, who I would say in most countries are quite enthusiastic, as long as you have been, when you're standing against the wall, this is quite attractive, I must say. But then it's up to technicians to help the government, once they've taken a decision, to communicate this so that you get the public sector, the public and the international community on your side. Because this is crucial, and this is something that is where the cooperation is very important, that you kind of launch it as something that is good for the country, and it's not another crony capitalist setup.